Moving on to our third executive in terms of small caps today, Alkane Resources, releasing their September quarterly results, illustrating a busy period of activity. Let's get the detail. Alkane's Managing Director, Nick Erner, joining us now. Nick, welcome to AusBiz. Thanks for joining us. So, now, you're primarily in the gold space. Just to talk us through your latest results.
Yes, we've just put out our quarterly report. We run a small gold mine called Tomingley Gold Mine in between Dubbo and Parkes in Western New South Wales. And we produced on forecast there. So we did just over 15,000 ounces of gold at an all-in sustaining cost of a bit over 2,100 Australian dollars. So a really solid quarter for us on the production front.
How are you managing costs at the moment? I mean, clearly that has been an issue, particularly in the gold mining space.
Yeah, that's true. Costs have risen in the gold mining space, a range of different factors: fuel, reagents, steel, to a lesser extent, the cost of our people and all that flowing through into the gold cost. So for us, a large part of our dollars per ounce, which is how we're measured, is affected by what areas of the mine that we are in at present. At the moment, we're in a slightly lower grade area of the mine and moving into higher grade through the rest of the financial year. And so that's why our dollars per ounce look a little bit higher. But our flat dollars per tonne, so the cost of each unit underneath, is pretty much unchanged. So yeah, we're pretty happy with how we're holding our costs together, and mostly input costs have now stabilised, Andrew. So a lot of those things that were rising have now flattened out.
Beyond Tomingley, what else is in your portfolio at the moment?
Yeah, so the other large thing that most of our shareholders are pretty excited about is our large exploration project near Wellington, which is called Boda Kaiser. It's a gold and copper project, a porphyry project, which is a particular style of mineralisation, larger, lower grade. And we've done a lot of drilling. We spent nearly $8 million worth of drilling there in the last quarter and put a lot of those results out, and we're working on an update resource for that. So that already stands at a bit over 15 million ounces equivalent in gold and copper, about half the value in each. And so that's the main thing that we're working on. And coming forwards, the coming quarter, we'll put out that updated resource a bit after around our AGM in late November. So yeah, it's a very, very busy period. We're implementing extension and expansion at Tomingley, like I talked about. We've spent nearly $16 million in growth capital there to extend the mine life for nearly 10 years, and then this exploration project. So both of those things are keeping us pretty busy, Andrew.
Nick, how would you describe sentiment in the sector at the moment? Clearly, we know where the gold price has been going more recently. That's really benefited the larger end, the big producers. Haven't really seen that translate to perhaps where you operate. How would you describe that sentiment?
Yeah, the small mid-cap sector. So, our market cap's around that sort of $400 million, a bit under Australian. Yeah, certainly I'd call it subdued. So right down at the very small, explorer stage, it's been very difficult for anyone looking to raise money. So whilst you're seeing broadly in the market, gold, Australian gold is, up above $3,100 an ounce, due to the exchange rate falling and some of the uncertainties driving gold up. But the sentiment hasn't really flowed through into the junior sector in terms of people buying gold stocks, even though the margins are increasing. And we also see a little bit of, sort of M&A activity has occurred and is mooted around, but that seems to have slowed as well. So I'd call the sentiment pretty subdued. Certainly a lot of fundamental investment funds aren't looking at gold companies yet for return, so they're tending to either stay out of the market with their risk allocation or putting their risk elsewhere into some of the more specialty metals. So subdued, but I do feel that if we continue to see sustained Australian dollar gold prices, that could probably turn in the near term.
Yeah, perhaps putting money elsewhere. I dare say you're pointing your finger at lithium. That tends to have sucked some of the enthusiasm out of gold, hasn't it?
It has.
Yeah.
It sucked a little bit of enthusiasm or even sort of some of the nickel stuff lately. Yeah, that's correct.
All right, but it sounds as though you're relatively optimistic that it may well turn. So is that, and how well placed are you at the moment, particularly as far as your balance sheet is concerned?
Oh, we're very well placed. So we reported, just a couple of days ago, our cash and listed investment balance is, just under $100 million, about 94 or something like that, and the vast majority of that is cash and bullion. And we have an undrawn debt facility with Macquarie of 50 million, and we're deploying that money, Andrew, at the moment on expanding Tomingley that the mine I spoke about in extending its life, and of course doing this exploration. So we're very well positioned from a balance sheet perspective to do all the things that we've got planned in the coming 12 to 18 months.
I gather you've also taken a position in fellow gold producer Calidus Resources, yes, and offloaded a holding in Genesis.
Yeah. So we were at one point before the very successful transaction that was done with Raleigh Finlayson to take the lead of Genesis a couple of years ago. We were a 20% holder in Genesis, and like every other shareholder in that, we've benefited from the sale of that. We've netted tens of millions of dollars from that investment. And Calidus, we have a 9% position. Both of these things were footholds for us in trying to look at how might we become a multi-mine producer. So we're pretty positive on the work that Calidus is doing at present, but it's pretty much a watch and see investment for us at present as they outline new ore sources that they can bring on. So not really planning much in that space at the moment, apart from to sort of cheer them on like any other shareholder as they move through their later development stage and stabilise production.
Yeah, we have seen a bit of M&A and consolidation in the sector. Have you got your eyes on anything else at the moment?
I mean, like most people of our size, we're always either being approached by brokers and others, or looking at other people of similar size, so that if someone were to approach us, we're ready. I mean, we're yet to really see assets, I think, come to market that reflect the value and position that it is at the moment. And what I mean by that is it's expensive to develop at the moment. There is risk associated with what the forward gold price projection might be, and so the prices that people might be looking for their assets aren't really reflected in that. So no, we're not actively chasing mid transaction with anyone at the moment, but certainly there are some privately held or smaller public companies looking for money that we continue to watch. But as would everyone else of our size as well.
Yeah, absolutely. And Nick, great to get the update. Thanks for joining us from Alkane.
Thank you, appreciate it.